we would have already had a recession if it wasn't for the mass infrastructure spending on AI that took place that was not expected, right?
AI is like running water out of your wall, out of your faucet. Why? Because you have to have it. It has to be there. And every company today is an AI company. Sorry, every software company at the very least today needs to be an AI company, the same way that every software company in 2000 had to be an internet
They
company.
finally have a competitive product to Procore to go after construction. And we are seeing companies leaving Procore.
On Katera, so I'm not releasing the name or whatever, but on Katera, one of the people that would consider themselves a founder actually told me once, by the way, great person, love the relationship, but heavily disagreed on the reasons of Katera's, let's say, lack of success, eventual success. That person actually said, Patrick, the only reason why we weren't successful is because we didn't raise enough.
Oh my God.
I'm not kidding.
Bricks, bucks, and bytes. Bricks, bucks, and bytes.
Okay, good afternoon, everyone, and actually, good morning. We have a new, can we call him a host yet? Do you think?
Sure.
Yeah, co-host.
Do you guys know this guy?
Who's that?
Heard of you?
Dustin Devan?
Dustin Devan. When did you come on Bricks and Bytes before?
Just once before, but I guess you guys liked me and brought me back.
Yeah. Are we trying to
Wow.
like you more?
Looking forward.
Oh, I need to
Well,
have some response to my awkward comments sometimes, so just keep it on.
what I can say is thank you for joining. We're grateful to have you, and we're looking forward to having some fun on Bricks, Bucks, and Bytes over the next few months. And yeah, welcome to the family. And let's do this. So, guys, today it's very, very hot in Europe, and it's getting even hotter as this podcast goes on. So, just thought I'd mention it because brain might start switching off as we get through these topics. But today we're going to discuss the U.S. economy contraction. So, I think latest figures suggest that there's a 0.3% drop in GDP. So perhaps a recession on the horizon for us. We'll then move into Autodesk stock. Is it a good investment? I know some people here have some good opinions. We'll talk on some takes on AI documents, and we will get to the top construction tech failures according to our community. So,
It's a juicy
shall
slate.
we? Interesting slate. Anyone want to bring anything else to the agenda?
I mean, who we should ask about the recession in the US, like Dustin, who is currently in the US, looking at the pre-construction very closely.
Yeah, Dustin, 2 secs. Before you do that, let me just give some bullet points here to give listeners a little bit of context about what's happening in the wider world. And we will, of course, try and relate this to AC as much as we can. So the US economy is contracted by 0.3% in Q1 2025. So this is the first decline since 2022. However, real final sales to private domestic purchasers, a measure excluding trade and government spending, is increased by 3%, indicating robust consumer and business activity.
Yeah,
And
primary driver.
yeah, go for it.
Yeah, the primary driver for why we contracted was a pull forward of imports in order to get ahead of tariffs. So it isn't as disastrous as the top line headline reads. However, today was, I think, a bigger report where the unemployment, new unemployment benefits actually rose much more than expected by about 50,000 new applicants. I think we were projecting 225. I think it came in at 275. Of course, I only got to glance at it for a second. So that has me more intrigued. Anecdotally, it does feel like the job market is a lot easier to hire for. And you consistently hear about layoffs and people focus on gross margins and efficiency. So while this tariff shakes out, I think we were talking before this, it does feel like the US is lagging behind getting ahead on lowering rates. And I think that if you look historically at what this Fed has done with Powell, they like to be very confident before they make adjustments. They want to be very confident before raising rates. We waited a real long time. They like to be very confident before they're going to lower rates. Which, we're one of the few central banks that haven't started significantly reducing our rate. If we don't reduce our rate, this is where it's going to start affecting the AEC industry. With tariffs, we are significantly increasing some of our input costs. Projects are already having trouble with the borrowing costs with where interest rates in 10-year and the 30-year are. So now you have higher input costs, which means projects are even more expensive to perform. I think that this is going to lead to a slowdown in construction. A lot of companies that we're talking to today are trying to discuss with owners, and they're like, well, what is our price certainty of this? And no one can provide price certainty, right? When construction projects can't provide price certainties, can't provide GMPs, or GMPs just are way higher than the client's willing to pay, you can see substantial reduction. So,
What GMPs is?
guaranteed maximum price.
Dustin, is this people that are already locked into contracts? I don't know how specifically how it works in the US, but over here in the UK, you would sign up to a contract, be fixed to that price, and then you have to deliver for that price. Therefore, if tariffs impact you whilst you are during the process of delivering that project, tough shit.
Yeah. No, if you're locked into a contract, that's all well and good. But, pre-con lasts for 2 or 3 years. So some of these projects that people are working on and money has been earmarked or benchmarked for them, expecting to, break ground at the end of this year or beginning of next year, you could see significant delays. And as construction, like we've had a massive push in spending, especially for the hyperscalers, data centers going all over. There is a question, are we overbuilding for compute? We're seeing AI adoption, that's all, and we'll talk about this a little bit later, not necessarily solving as many enterprise problems as I think build sustainable businesses. So if we've overbuilt for compute, and a lot of these hyperscalers even don't continue to grow their data centers as much as they are today, then I think construction overall contracts. Where the problem with construction contracting from a gross domestic products perspective is construction, it depends on how you count it, but is the third largest employer directly of labor. And so 7% of the consumer market is consumers of GDP is consumer spending. When you have the third largest employer of the workforce contracting, you will see GDP pull back. And so this is where I actually think that at some point our Fed is going to have to significantly reduce the interest rate.
What would be the what in your understanding would be the trigger for this? What would have to go wrong for this to happen? Because last few weeks you could see stocks coming down quite significantly. Wasn't enough. So like, what's the trigger, do you think?
So it's going to be, well, that's the problem. We're going to wait until there's something
Until it happens.
Yeah, something that people can hang their hat on, and it's going to take some time, and then it's going to fall off the cliff. Now, all of this can probably be reversed, but I don't see us striking a deal with China. And if we don't strike a deal with China, the Fed's going to take a conservative perspective for a while. So going to be some sort of event.
Doesn't do you by chance know imported building materials? Are they part of the 10% flat tariff or are they exempted? Do you know?
No, right now they're part of it.
Okay.
Yes.
Okay. Because I was just looking up. So about 10% of the building materials that go into US construction activity are actually imported. And I assume it's wildly varied, right? So, and especially when you go more for the raw material, there will be a lower share. If you go for finished materials like windows, for example, I mean, you import a lot of windows from Mexico, right? So I expect it to actually be wildly oscillating. It's not 10% flat that is imported. It's like, hey, some categories like a larger share, some maybe higher up the value chain, lower share. I think that's going to be something. We had a similar effect here in Europe in the COVID times, right? And so COVID made not only the shipping more expensive, but actually we had a real wood issue in the supply chain where getting construction wood was becoming a real bottleneck. Europe gets a lot of its construction wood from the Nordics, Scandinavia, from the Baltics, excuse me, and actually from further away. And that became a real crunch. And we saw, if you guys remember, I mean, you must remember this, we saw wild swings on the construction prices, and we had on the construction materials prices. And we had even these incidents where all of a sudden the trading of construction, the procurement of construction materials became a trading business, very similar to how you would trade generic pharmaceuticals. So if you guys are not familiar with that part, I have a friend who does that, and they actually sell pharmaceuticals while it's still on the train or on the truck, and they would trade that. And that was happening in building materials during the COVID times. I have a feeling we're going back there.
I completely agree with you. And that also happened during the supply chain crunch with COVID. Some of the small electronic components, because I was doing a hardware company at the time, and people would buy up little transistors or little just components that would go into automobiles. We did a home air quality monitoring device, and which would still be consumed by this. So you had a lot of Chinese brokers actually buying up these commodities.
While they were in transit, basically.
No, they go to the manufacturer and try to secure as much of these. They had the foresight to do it.
Got it.
Yeah, we definitely saw people buying large pallets of materials and storing them just in case. And it sounds like a similar thing is happening in the US right now, which has caused part of this contraction whereby people are investing in and buying equipment. I think, Dustin, you already earlier mentioned that. And then I guess the same thing will happen, right, Patrick, to your point, whereby people will just end up stockpiling this I don't know what the wider ramifications of this stockpile is, but I guess it's not, I don't know, is it a good thing?
Yeah, and I also, as you're asking this question, like, are we not looking at this from a very short-term period of time and point of view? Like, let's say 8 months ago, probably there was no conversation about tariffs. Now every single news is about tariffs, but looking at it
including
from,
us.
Yes, looking at it from 2, 3, 5, 10 years point of view for America, is it going to be net benefit or not? This reshoring thing.
Short-term pain.
Yeah, because everyone is in a pain in short term, but as we all know, you sometimes need to get on the treadmill to be in a good shape in the future, right?
The thing with the treadmill is you know how your body will react. There's a stable framework under which you're investing in yourself. That is the problem.
Unless your coach is a little bit crazy.
Yeah, no, you just have some guy standing next to the treadmill and he instantly puts it on like level 15 decline suddenly, and you just crash off the side of the treadmill.
Yeah, but your body will not erratically decide after 3 months. Oh, by the way, now I think that exercise is actually going to make me fatter. There's a framework you can rely on.
Unless your coach
I
says
think
that.
anyone who says that they have an answer of how this stuff is done, including
Overconfident.
people.
What do we think?
I think reorganizing the global supply chain is a monumental task, and try to force it and compress it into a time frame of 3 to 6, 12 months is a completely unrealistic goal. But I do think that the person in charge believes that this isn't a political statement, believes that this is the right thing to do. And so they're going to follow that assumption that you have to start and go through this pain. So where that leaves us, I don't know. I don't know if the administration will make decisions based upon, no, we have to do this, or I am now seeing the negative effects and we need to take a more aggressive approach. That seems...
Look, I agree.
Yeah.
I agree with that, Dustin. My issue is with the stability of the investment framework, right? So I remember very clearly, I spoke to a founder out of Texas in October last year. I think the last chat I had with him was then about 3 weeks removed from election day. And so he told me, I remember it vividly. He told me, Patrick, I have customers His main customers are Texas, a few in Florida, and a few, I think, were in and around the Washington, Virginia area. He said, I have customers who tell me, Patrick, if it's going to be Kamala, I'm going to fire 10% people. But if it's Trump, I'm going to have to hire 20%. That didn't turn out that way, right? So now I guess
Not
if
yet.
you poll,
Maybe.
fair enough, right? But they were, this person that he was sharing with me made certain assumptions about the stability of the investment framework. And so I don't know how familiar you guys are with China. I studied in China. I spent a little bit of time there, but that's been a long time ago, but I still have friends there. And Shub on our team is actively looking into China too. And so one of the things that you typically attach with the Chinese economy is, hey, it's long-term planning, there's patience, there's a top-down plan. But actually, there are instances where that is not true and things get overthrown overnight. Here's an example from the education tech space. So China had produced several of the largest education techs in terms of market capitalization there ever were. $10 billion plus companies. Until I'm making things extremely simple now, and I'm sure I'm omitting critical details, but until people in the administration decided, hey, our youth is spending too much time video gaming and using these gamified types of solutions, education tech, gaming space. We don't like where this is going. So then they implemented almost overnight regulation that would limit the amount of video game and screen time for the youth. I'm not kidding you. That
For
happened.
the youth. Okay.
Yeah, exactly. So this was 2020, 2021. That happened in a country that traditionally we in the West look to and say, hey, there's stability, right? There's, whether you agree with the things or not, but people in the West will typically say, hey, there's stability, etc. But every kind of stability, once you throw it into uncertainty and ambiguity, the framework under which you invest becomes very different. So you as a VC, or foreign or domestic, would you at that time then invest in gaming or edtech companies? The answer is no. So all of a sudden the market cap plummeted and $10 billion plus companies were wiped out. Like literally that happened. So back to construction and back to the anecdote from this founder and his customers. But that's the situation we're looking at, right? So it doesn't matter, Martin, whether I can be optimistic or pessimistic. I agree with Dustin. If you actually try to predict this thing, you're way overconfident, because what signals can you use to predict this uncertainty and ambiguity? As an investment framework, it's not good.
Yeah, I think that's a valid point. But I think it still touches on the short-term thinking that I mentioned, because if these investment managers or investors, they will not have a good year or two or three, that's kind of their problem, I would say. But the problem here is, I guess, reshoring the industries, bringing the industries back, which is more grand kind of vision and thing to do for the country to do, rather than having rather wealthy people getting them more wealthier.
Yeah, but won't reshoring just increase prices even more of things?
That's something I don't know how this will play out. Probably, well, definitely it will.
So is that not long-term pain too? Short-term pain, long-term pain.
I think this is why a more nuanced approach makes a lot of sense. It feels like, all right, the blanket tariff of 10% or whatever, some things are in every country's interest to be able to produce to some extent. And then there's some things, why would we ever want to take that on? And so a blanket, why are we worried about that? It just makes no sense. I think that fundamentally, I'm much more of a free trade activist, and I think if people eliminated this barriers, all of society would be better off. And so I'd love to see a state of the world, but I do realize that some countries do need to protect, because they're smaller and less diversified. So they have to protect some of their few industries from not being able to produce. So what China was to grow to where they are today doesn't mean it has to stay that way moving forward. Unfortunately, they do have this long-term horizon or long-term. So China has both an advantage, a better advantage to handle these situations than the American political system, right? We have elections every 4 years. They have someone installed for life. This person can make decisions and can think about what they want to do for the next 20 years. And they have a 50-year plan. and we have to think about what can we accomplish in a short interval of time. And that does make trying to do things on this level, on this scale, I think really challenging. But to Patrick's point, this is one of the reasons why I think the overall economy is going to continue to slow down, because major investments aren't going to be made. Like, you're not going to invest 10, 20, $30 billion when you are uncertain about the future. There's no risk and little risk in waiting and seeing how the chips land, the cards fall, like taking a flop rather than going all in pre-flop. Like why? Just sit back.
Yeah, to your point on this overall slowdown, we definitely can feel it here in the UK in construction industry, that it's slowed down since, well, January-ish time. I'm very curious,
The
actually.
murmurs are definitely between my network as well. Is things are quiet at the minute over here.
Well,
Very different here in Germany and France. The complete opposite.
Of bazooka is the happening.
Yeah, that was also overdue. We had the phase of pessimism the last 2 years.
We need Owen some sort of
No, I think maybe we just need, we need to invest in our marketing department more and do more podcasts. What do you think?
in Germany and France.
Very
I'm
good.
very curious, Patrick, on this actually. What is your partnership saying with regards to business activity in Asia, India particularly?
Yeah,
I'm not
just
talking
Shoop.
startups. I'm not talking startups.
Yeah, I understand.
Mhm.
Not just Shoop. I have LPs who have business in India, some fairly large, some have more like passive minority interests. Overall, the Indian construction ecosystem is,
Doesn't give a
let's say, up until 2 to 3 weeks ago, which if you followed the news, there were very, very horrible and abhorrent terrorist attacks in Kashmir happening. So I'm going to comment up until that point in time, because the last 2 to 3 weeks have changed a lot within the Indian domestic sentiment and it has created ambiguity over perhaps a contained war locally. So up until that point, the construction activity has been going up. And if you remember, for the last 10 years, they have invested every year about 150 billion, let's say the last few years, 150 billion per year into infrastructure only. The middle class is investing relatively stable and uplifting itself into home ownership in India, and all of that you can feel. Now, up until 2021, that were the crazy days, like everywhere else. But even since then, India is operating on the growth part of the S curve of its economy, and so that is still being obviously fueled by a little bit weaker than in the recent years, but still stable Modi government that still has a lot of sway, that can invest, etc. And also on the capital markets, India, if you zoom, when in doubt, zoom out. They say that in the stock markets. If you zoom out, it's still on a rally. The last year has been a bit of the consolidation phase of the rally, but overall, it's still on a rally. The Nifty 50 came back about 10-20% this year. Again, overall, it's an economy that, from a construction perspective, is good. But the last 2 to 3 weeks introduced ambiguity too.
So they're not bothered about tariffs much between.
If you ask me, if there is, look, Germany
Actually,
for
good thing
6
for them, right? If there is a issue between US and China in terms.
Look, there are three big export nations in this world. It's Germany, Japan, and India. And if you ask me, Germany was the big winner of 60 years after World War II, after the US. India is going to be the next 60 years winner. That's my personal opinion, because of the export nation. And China has to find a new market if the trade with the United States develops, unfortunately, not to both sides' benefit. China will need to find new demand for its manufacturing. China is the largest country on earth India is the largest country on earth before China, 1.37 billion people. So we are seeing actually thawing in the relationships between China and India after many, many years of freezing.
Yeah. No, it's very interesting in that the U.S. is the largest consumer of Chinese products. So I do think we have some leverage. And if they are not able or don't realize that India has demand to at least offset it, that's where I see a deal actually be getting done. If people
That would
recognize
be good.
it's nuclear destruction for both sides if we don't. China would have massive manufacturing layoffs, and I don't think that they can get to the same sort of consumption in India right now that they could in the US.
No,
One other,
no, that will take 10 years.
it'll take at least one of the interesting note, and this is where I think it would be a good segue to talk about these AI companies. But I don't think people realize that the US, and I think in general, we would have already had a recession if it wasn't for the mass infrastructure spending on AI that took place that was not expected, right? All of a sudden, ChatGPT and all these models, and then you see a race, and this is private investment into this sector. This kept afloat a lot of construction companies. In fact, they had revenue accelerations because of one specific vertical that was on a path like this, and then just asymptotically grow or non-linearly grow like a rocket ship. And that I do see slowing down until we are able to take what a language model does from a technology and start applying it to actual business. And I think we'll talk more about that later, but
We can go on to that, but I have one last question for each of you. What it means for your respective businesses. Do you what this overall perhaps situation in the US and tariffs and et cetera, do you keep your head down, keep going? Do you try and make some adjustment now? How do you see it panning out?
Yeah,
Patrick, I'll go to you first.
okay. Oh, I wanted to ask in terms of Dustin because, but I will come to that after Patrick then.
I think you're asking the wrong person first, because my business in the end is a financial product. It's not as connected to the economy as the real businesses out there. Financial product in the end is always somehow engineered. I don't have leverage to play with, so in that degree, it's a little bit a truer product. But look, I buy in year 1 and I sell in year 10. The amount of adversities and highs and lows in the market that I have to endure during my holding period oftentimes is 2 to 3. And the markets become more volatile. So actually that's only going to be more for a financial product like mine. So honestly, my product as such is not very influenced by a down year or a up year, which makes it also tricky because in the end, my control over the timing of my entry and exit points is very limited. So there is an element of fortune and luck to the entry and exit points. And whether you're in a down year or an up year, to a degree, I can somehow manage it, but only to a degree. A business like your guys and Dustin's, yours, it's much more implemented. So honestly, let me not comment on it because the impact on my business is just so low for that reason.
And that reflects all of the VC market or only specifically construction technology?
It will impact the early stage investment asset class the least, and it will impact the pre-IPO and late growth window much more, because for them the compressed cycles and the promises that they make to their investors of typically 3-4 years to an exit event means that you can't catch one of these recession windows. And unfortunately, take it like this. Imagine you're a growth fund and you invested in 2020 and you promised a 3 to 4 year exit horizon. That was not a good vintage.
Mm-hmm. So do you have any companies in the Western Hemisphere that are at this later stage of funding? I know you've got
a few Series
somewhere
C,
else.
yeah. I mean, we have a few in the US that we caught 2019-20. I think that for us is not going to be the greatest crop. I have a few in Europe. I've one in Europe that is post Series C, but will still need another 5 to 7 years to a big exit. So right now, I don't feel the impact just yet.
Mm-hmm. Dustin, on you, I wanted to ask because companies like Document Crunch, for example, have released some featured related to the whole tariff turmoils. Are you with your Precon Edify proposing something which can help in any way the whole situation for the construction industry?
Well, how Edify is built inherently is it's built around solving problems in pre-construction. So if you were to ask me, is this a good market for Edify? I think that this is probably the best market. Is owners want to discuss more options, and pre-con's going to last longer. Generally, you're going to need more people in pre-con. So legacy desktop solutions will become more impediment of them performing their function, where Edify is trying to bring managing costs to the cloud and much more collaborative approach. So I do think from a customer acquisition perspective, as these projects are going to have more conversations because they're not penciling out, they're going to do more value engineering, they're going to do more designer operations, they're going to do more options and scenario planning. That is better inherently for what Edify is trying to do, because we're trying to be that source of truth for what a project costs across the design iteration process, and to be able to articulate that to the client. So in general, that's really good. It's good for customer acquisition. How much customers want to spend when the projects aren't being, when their contracts aren't being signed is another question. But I'd rather have an easier path to customer acquisition and more of an awareness that their current solutions are an impediment for them being truly successful. Like a lot of people, when work is good, they think they're the most brilliant thing ever. And they don't like to reflect on, oh, wait, actually what I'm doing is not that great, because they're making money. When money's free and everyone's doing well, it's really easy to slap yourself on the back and say, I'm a rock star. Like if you were investing in the stock market in 21, myself included, I'll put here, I thought I was the greatest investor ever. In 22, I got freaking smashed. I almost said a bad word. And I'm like, what happened? They didn't understand the fundamentals of the stock market. Understand how inflation and the bond rate and the Fed are very correlated, and you have to adjust accordingly. And so, when people actually have time and things aren't going so well, and you have real solutions to the problems for them scaling their organization, I think it's great.
Hey, are you actually? Is the implication also, Dustin, that your business with Edify is going to be better the more volatility there is in the market?
Yeah, so right now today we don't solve those solutions well because we're creating that foundation. But as we start getting into that process, we'll become much better at giving option engineering options to customers that they can deploy. But the way we do programmatic parametric estimating allows you to option engineer much more quickly than you would in a standard estimate.
On this
So
pricing,
you can withstand volatility. I think next week we're looking forward to your MAGA hat when we go on air.
I abstained. I did not vote in this election, for the record.
Justin, on the pricing, have you experienced customers asking for like a renegotiation of the contracts, or just because maybe they don't have enough inquiries, or?
No, nothing to that experience. We're working with some really top-notch builders, and they believe in the value of what we're providing. We're actually trying to do a better job of not selling to companies we think aren't the right fit right now, because we're at the nice stage where we can work with the businesses that are really great and grow that way before we just have to take on anyone. We've taken on a few that it's like, yeah, that really wasn't the best fit. But also our pricing is not crazy. We are going to grow because we're going to get a lot more users involved in pre-con. And this is the thing that no one thinks about. Like people classify as estimating software, so they think only estimators are involved. If you run a really good pre-construction process, you have your business development folks talking to the client, you have your project executives talking to the client, you're building out your GCs and GRs with your project manager and superintendent. Your project engineers might be buying out some of the trades. So people that aren't used to being in the software because they didn't buy licenses for them. So we're trying to price something that is much more scalable across the entire organization. Now we start with the estimating for our prices aren't offensive because of that. but allows more people to.
Would you have any advice to founders, maybe who are thinking about pricing of their products in this environment, or it's doesn't make a difference between now and before?
I think my only suggestion to founders is, well, it depends what stage. Very early on, I think pricing matters very little. I'd rather have 10 logos that just really love our product. And I think a lot of people, it's funny, I've been a part of board meetings, and I think too early board members, I've been a part of many board meetings, so I'm not implying this, and it's not a signal to my board or previous boards of my companies ever did this, but I see a lot of investors, and I think it's for a lack of experience of not ever being an operator, focus on revenue growth before you focus on product market fit with an ICP.
100%.
Growth is the output. Getting a product market fit and a repetitive playbook and a message resonate with customers and onboarding process and all those things, much better. So early stage customers, it's not about pricing. Make the pricing as simple as possible and try to back calculate, like what do you actually just need to make on a logo, and go with the minimum. Now that's contrary to what some people will say, which is try to extract the max value early on. Like that is one roadblock in you proving out that you can land customers, because you can always increase the price later.
Okay.
Beautiful. Okay.
100%. I need to discuss boardroom dynamics in one of the next episodes, but
well, I was going to ask you
We
Dustin,
should
while you're speaking.
conversation, by the way.
dude, that's like 2 hours of ranting with me. That's
Oh yeah, come on, let's do this.
Hey Owen, can I inject one quick question?
Of course.
Dustin, actually, it dawned upon me right now that you shared a little bit more about Edify as well. Actually, in connecting it back to our first topic, guys, from today, the outlook on the economy. Actually, when Edify gets rolled out at scale, you should actually be in the position to be the construction activity index, aren't you? Because if you should be seeing all these RFQs.
Yeah. So theoretically, we should be able to do that. It's funny that you bring that up, because my first company, BuildingConnected, no one knows this because Autodesk doesn't do anything with it. Still love you, Autodesk. With BuildingConnected, so BuildingConnected was this network to invite subcontractors to bid on projects used everywhere across the United States and Canada. Underlying, we built a project graph. So we know BuildingConnected today knows about every single project going out to bid in real time, who is bidding on it, the project value, and the price by trade. It is the single best real-time data source of cost in the US, and would replace any sort of cost escalation Autodesk choose. It literally, they should just sell it to the US Census Bureau, make like $30 million.
Wow. Maybe
Now you get to rebuild it.
No, now we can we can do it with higher fidelity than BuildingConnected can. Yeah. So I guess I've been trying to index this industry for a while.
Hey, that would be a killer content format. I have a company in the US that does AI for supply chains. It's earlier than BuildingConnected is, but they actually started a content format where they basically put out freight indexes based on what their supply chain managers are actually putting into the system. Early days, but I think that can be a kick-ass format actually on content and marketing.
In order to do it with Edify, it's unique because each customer has their own unique unit cost database. So how they label things, what we've told customers is that we never anonymously aggregate costs in data without them knowing about it. We haven't built this technology. Everyone knows that. And we will talk to you if we ever do. But in order to map that, this is where we would use language models to go from one index to another and say, hey, we have 90% confidence that this price equates to this price over here, and bring them all together.
But you could start with activity though, construction activity. I mean, you can probably just extrapolate that today for specific regions where your customers are at.
Yeah, we're not that big yet.
Guys, maybe we will answer the burning question I have about trying to find a construction economist to join one of our shows in the future. Maybe we'll just go straight to Edify or BuildingConnected's old database. Shoot from there. Next subject. Shall we move on? Okay, so Dustin, you've done a great job of teasing everyone about this AI discussion, and we also mentioned it earlier. Patrick, you said you were happy to sponsor this. Before we go there, I have a question for you. Is this the one that you discussed on Practical Nerds recently about the bathtub?
That is right. Yep.
Then
I like
you
my
will be
bathtubs.
then you will be delighted to hear that as of today, I have reignited my summer running routine, which involves running early in the morning, listening to Practical Nerds.
Thank you very much. You are my listener. That you're the one that I always see in my analytics.
Hey, you mentioned something about regular listeners on that podcast actually, and I think you referenced your respective mothers. So I'm glad I can join the hierarchy.
That's right. Three listeners. That's right.
Well, with the reference to a recent conversation about the Western marketing, I listened to the episode with Shub 2 times yesterday, I think. So
2 times.
Yeah.
Jeez, Patrick, you're listening. This is the wrong way around. We're trying to grow a
Man.
podcast here.
Nice. But hold on. When you go running, you go like 4 a.m. though, right?
Actually, well, sunrise was 5:15-ish. So I went this morning. It was still a little bit dark, but it's the most beautiful time of day because by the time you finish, the sun is up, and you like. I don't think you can get much more soul fulfilling exercises than that.
I got 7 miles in before this podcast. Because we made it 8 a.m. my time, and yeah, it's on the. It was on
Kudos to you guys.
6 a.m.
Bricks,
How many
Box,
miles?
running
7
club.
miles, you said?
7 miles. I did a 5-minute tempo threshold run. The month.
Nice.
Mhm.
Did you
Not
listen
too
to
bad.
Practical Nerds?
I don't know headphones. It's just entertaining.
Hmm.
I was doing mental prep for this podcast.
Bird singing.
I don't recommend it in the morning. So
So with
that's
that,
why I'm
Patrick,
surprised you do it.
before everyone gets serious FOMO, could you enlighten us?
On the bathtub thing?
Why not document AI and your thoughts on where we're taking this conversation next?
So the metaphor, credit where credit is due, was actually informed or inspired very, very much by Stan Chayu at Rayon. So he came up with the metaphor, slightly different context, but it works for me very well in general in AI, right? And so I want to talk to you guys about that, but then specifically about like contract AI, construction project, documentation AI, etc. So, but let me give you the metaphor first. So in this discussion with Stan, the metaphor that came up was, okay, in the end, AI is like running water out of your wall, out of your faucet. Why? Because you have to have it. It has to be there. And every company today is an AI company. Sorry, every software company at the very least today needs to be an AI company, the same way that every software company in 2000 had to be an internet company, right? I mean, at some point, people didn't put on their pitch deck anymore, hey, by the way, I'm an internet company. Of course you are. You don't have to tell me. And so a company that is building software for AEC today, to me, it's almost obvious that you would make use of AI, and that's only ever going to increase. But with that comes the necessity to do it, the fact that it's a commodity more and more and more. And, you know, we see foundation models that creep into more and more functionalities that you can do with it. In that metaphor, that's the running water. It's very important to what you're doing. There is a way how to get it out of your wall or your faucet, but how can you hold it? If you cup your hands under your faucet, you know, you're going to lose a lot of that running water, obviously, and you can only hold so much. If you don't even cup it and you just let the faucet run, well, your apartment is going to flood, right? It's basically just, hey, this is a fucking mess, right? This is a mess, right? And so what am I going to do with it? So you need a vessel to contain it. And that's the bathtub metaphor. You can use a bucket to hold that water, but in the end, that's only going to hold so much. The thing you want is the bathtub or the pool or the ocean. You want to be that. And that in my metaphor is sort of the types of companies I love the most and look for most actively in AEC software from the investment side is I look for these bathtubs. Why? Let me give you an example from the design space. You guys know I'm passionate about that. And we're going to talk about Revit perhaps later on, right? So if you're authoring in 2D, 3D, and BIM, in the end, if you have an AI functionality to auto-generate something, do you really think that going back to that same AI functionality to draft the second, third, fourth, fifth iteration, 1,000th iteration that you're going to need, do you think that an LLM prompt is going to be the most efficient way to manipulate a specific part of the geometry? It's not. That would be absolute madness. Instead, you're going to have a more efficient way to do that. That efficient way exists today. That is, for example, Revit, where I directly manipulate the geometry, right? To create that from scratch, that's very tedious. That's where AI generation can come in if we find a proper way to build models that can manipulate geometries, etc. People are working on that, great. But at some point, I will have to manipulate it. That's the bathtub that Revit is. That is the bathtub that is most likely to hold the AI functionalities, but in the end, allow you to then go back and manipulate it. And right, so for me, bathtubs are authoring tools. Bathtubs are systems of record. Bathtubs are ERPs, enterprise resource planning softwares, data infrastructures, process mining companies, even ERP migration for AEC. I love these types of things. And that for me is the bathtubs. But I get less excited about the companies that put water out of a faucet, if that metaphor means something. So fire away, but that's my metaphor.
You see what you're saying? Don't build the taps, build the bathtub.
For my taste.
I know we've talked about this a little bit, but it's like every single day a new company reaches out to me, and to use your analogy, they are simply the faucet. And why I hate that model is, what is your overall defensibility? Because it's someone else's bathtub. They're gonna own it, and you have to build a business. And I do agree that every company needs to be an AI company, but I don't agree that you initially need to start with it. You need to start. This is where I go up the wall. Is so many AI companies never even define what problem or what they're trying to do, how they create value for their customer. They just say, we're an AI for construction. And it is exactly the same playbook. 3 years ago, it was, we are blockchain for this. Why the fuck do I want blockchain? I haven't.
Maybe 5 years ago.
Why do I want blockchain? I don't know, but apparently you want to put blockchain on everything. Well, it's like everyone just like wants to sprinkle AI on top of it and call it a company. I'm like, well, we've lost touch with what is the fundamental reasons for why you want to start a business. You want to start a business to solve a problem. How big that business can be is going to be equal to how big the problem is and how many people have that shared. And so that's literally all you have to do to build a business, is find a problem, and then you can build it based upon how many people share that problem and how big that problem is, because that's going to equate the value you can extract per person, how many people have that shared experience. And so AI is a tool to solve problems. It is not, you don't start with a technology and then say, I'm going to go find problems. That's a highly inefficient way to think about it. So that's where I struggle. And then the AI companies in and of themselves, if you're not solving a problem, you're not going to be very defensible. Someone else is going to own that data. All you're going to do is identify a problem for that other person to go out and then
I agree.
duplicate. So, well,
The leaky bucket.
you're creating market.
Martin, do
who-
you have any foos?
Yeah, who is a bathtub in terms of the design tools that are coming to the market?
Incumbents or the new ones?
New ones.
So allow me to still say the incumbent. So Revit would be a bathtub, right? I mean, in my opinion, that must be one of the reasons why you must make Revit fully cloud ready, and why all of that investment has to go, because that's in the end, if you have the cloud ready version of that and adopt it in the market, all the AI functionalities will be in that. The modern challenges, look, I mean, a Mars company, Motif, is certainly going after a similar opportunity, the way I observe it. Snaptrude certainly, Rayon certainly, to a degree, maybe Clifton and TestFit also deserves to hear that, right? And so I would say in the authoring space, Kionic in Belgium is a very, very interesting company, former BricsCAD founders, highly accomplished and highly seasoned. So there are a few.
What would differentiate or make customers to jump into one particular bathtub, or it will be more fragmented thinking, having in the background that probably AI will allow for these tools to be more commodity. I'm just guessing. I'm not sure of this. Rather than being like spectacular tool that this tool can only do particular design tasks.
I don't want to answer this because I'm going to get into a 10-minute monologue. I'll let you guys first. Otherwise, it's going to be an awful podcast experience.
Are you angry at me?
Oh, no, but this is just a passion topic. You know that.
I think in the design authoring space, one thing that I think Autodesk has an incredible bathtub. And they have an incredible bathtub because designers need to collaborate and everyone uses Revit. And I think that a lot of people are focused on to significantly impact Revit, you have to build a strategy that isn't just about design authoring, but it's about how are you going to displace that network, the network effects that Revit and Autodesk have created. And I never hear, and I am nowhere near as familiar with the startups in this space, that you probably are, but they don't talk about that strategy. How are you going to disintermediate the network that's been built? And if you can solve that problem, that is really exciting. But if you just sell to individuals, it's going to be a long, tedious process. I mean, obviously BuildingConnected, one of the things I was really proud of is we had to sell and displace legacy software solutions. We did that because we created network effects on making it easier. And so like technology is sometimes the simple part. The business strategy is actually sometimes the really hard part. And I think,
but if there is a significant price differentiation and functionality of the software, is it not going to geometrically perhaps catch customers?
I mean, that is an option. I'm not sure if people are going to be making 10x product improvements. It's going to offset being able to work with all the other people.
So, that's actually a sad vision of it.
So I've heard the component of the pitch you're pointing out, Dustin. I'm going to build a suite of products. Authoring is my insertion point, but around that I need to build other parts of the suite to truly resemble the experience I can get from adopting an ecosystem like Autodesk. Mm-hmm. Or if I'm an infrastructure company, by the way, it's not Autodesk. Let's not forget that. If I'm an infrastructure company, I get the same thing from Bentley, if not even more integrated and more defensible. So that is the strategy to displace, I think, that you're pointing out. And so I've heard that maybe twice from authoring companies that they are going after that, but that will take time. Or great partnerships. So Amar at Motif, you guys had him on. Was your impression that's what he's building?
He's not spoken.
Yeah. Actually, Patrick, we had him on before Motif was announced, so we haven't received his wisdom since.
Okay, let's try again. I think he might describe it in a way like that, which is the suite approach. Now, if you want to build the suite bottom up, you're in for, even in the age of AI, in my opinion, 15 years plus journey, because just the authoring part takes you 7 to 10 years to be at minimum feature set, feature parity. It's a difficult product to build, and then to build all of the surrounding suite products to have not just an asset lifecycle view. I'm talking just within one project. Dustin, I think that's what you're pointing out. In one project within the Autodesk ecosystem, I can move from software to software, right? And so if I build a feasibility authoring tool, well, what can I offer after that, right? So that's the big question. I think M&A is going to open up for that, actually. And I would not be surprised if you have one or two authoring tools, like very, very good modern BIM authoring tools that earn the right to raise the capital to M&A other parts and add them to their suite. I would not be surprised if that happens. I would also not be surprised if there is a smart player that wants to rebuild what Revit has in a more modern stack to actually buy one of the big authoring tools and build around that through M&A. That to me would be something I think people might think about.
Patrick, do you think that the authoring space can be disintermediated the way Figma did with design, actual product design software? Because Figma initially, I mean, it took a long time to get going. It didn't have like Illustrator does more functionality, but the amount of collaboration, like that's the thing. You said it's a 15-year to be the authorization tool. Now I'm thinking about some of the companies you listed, maybe they're closer to this approach. Do you have to build, like the first 90% might take you 5 years and that last 10% might take you the next 10? Like, is there a Figma approach that just makes collaboration so easy that you can focus on rather than trying?
I don't know the answer, but I can tell you one bet that I've made that is very close to how you are describing it is in the 2D spatial planning space. So that is Rayon. So there I would bet on that, but because you have to do with prosumers more than you have to do with the hardcore professionals that have to operate in 3D and that have to build, whatever, Wembley Stadium, etc. So I don't know the answer, but that's one of the bets that I have made. What do you think?
I think that that's the most logical path for a startup to actually, it might be 2D, like because you build capital and then you build capacity to continue to dive further and further into a more high fidelity sort of experience and do the more complicated design authoring.
Are there any, Patrick, to challenge your point slightly, are there any companies within the AEC sector that we are aware of that have not built the bathtub, that are building the water from the faucet and have succeeded so far? Oh, I don't know how you define succeeded. Perhaps not succeeded on from your viewpoint, which would be from a venture backable perspective.
Well, we were just talking about it. There's companies that are just a faucet, but then it raised a lot of money, but that isn't a success. We should not name those names.
No,
I also want to be fair because so I understand why you asked the question, Owen, but it can be unfair to a small handful of them, to do premature judgment, because part of the founder journey, Dustin, is also to build optionality. And sometimes you start with something simple and indefensible, but because, you have shipping velocity, you build great track record with your customers, they entrust you more, and then all of a sudden all these optionality around, and then you build parts of the product and eventually you're defensible. That can happen. That can happen with some of them, right? But for me, from an investment perspective, both my money and investment is, the founder investing their lifetime. So both of that is an investment. From an investment perspective, I just sometimes don't understand why that is a smart bet to take. Why would you want to be the person that can do what 10 other generic people are seeing the same thing and they are looking for the technology they have the technology and then they are looking for the problem? It's not something that would fit my personal taste, but declaring them a failure, I think, is also too early.
no vibe coding in the AEC sector, no? Shall we?
By the way, I want to note, Dustin, I have observed when you spoke about Edify first. For me, that was from afar, and I was able to only judge it from there. But it sounded to me like you went after something that was completely hidden, completely non-obvious to other people. I mean, was it like that? That was not something you could come up with reading TechCrunch.
It is something that both me and my co-founder. When I did BuildingConnected, our mission was always to look, just because you have the trade cost doesn't mean you need to compare it against your estimate in order to ultimately become better at estimating. It's a cycle, right? And my co-founder was thinking about it from building it in the reverse, where you start with the estimate and then you have to actually go to buy the contracts. For me, it was obvious. This is why I always look for founding teams that have a super intimate understanding and experience with the space, because those things that you would never have surfaced, this is an opportunity, the way that I see a lot of founders, which are not from AEC.
That's what I mean.
And they are technologists and they start talking. The only thing they're going to surface are really bad ideas or ideas that 50 other companies are working on. And so for me, this was the last great frontier in a traditional SaaS application for AEC. Well, no, I shouldn't say for the construction side of AEC, because you have these project management solutions, Procore, Autodesk, but Precon, which is a huge space that marries both design and construction together, disparate systems all over the place. And that consolidation into a cloud application is inevitable. And I really hope, and I think we're on a great path to actually support that.
Good.
And I think you can't get to, so for you, it was, we call it here always, you guys know that's hidden in spite of obvious. So it's obvious to you, it's obvious to your early customer, but it's hidden to the generic people. That's kind of the things I love, guys. And so for me, back to the faucet real quick. So when someone says, hey, humanoid robots on construction sites, huh?
Yeah,
It doesn't tickle me. Like, hey, that's something I can just come up with generically, but why?
I mean, would I like to have a robot on my construction site? Sure. I don't know if I'm going to use it for construction. It's just like to have a robot.
Okay, we've got two more subjects to cover, and we teased on one just now, a big giant Autodesk. I think that we will discuss whether Autodesk is investable. So I found this YouTube video from a company called The Motley Fool, which I suppose you guys are all familiar with. It's financial advisory, financial services type of company. And their conclusion was that everything we know here, sticky software, but ripe for disruption. Yes. Management credibility is dented, but still standing. I guess it's public knowledge about the CFO news and so on and so forth. That happened, I think it was middle of last year or so. Strong financials with a growth ceiling. So gross profit, 5.6 billion on 6.1 revenue, which is pretty good. Valuation, expensive stock, split outlook. I'm not going to pretend I know what that means. However, big tech threats looming. This is a exciting point here. Alphabet Google was mentioned as a potential disruptor, particularly what we just discussed, particularly if AI evolves to the point where design happens via voice or automation. Mine, you added this point. I'm sure you did.
I didn't touch it, but I've been telling this for 3 years now.
Okay, and one of the analysts within there says Autodesk complexity and user base are seen as hard to replace, echoing how Excel remains dominant despite Google Sheets. Okay, these guys are not obviously sector-specific analysts, but they have some interesting points. So
yeah, but it's the last point is super interesting. So is innovation going to happen from Google's or from small startups? Obviously, that's motley article, so it doesn't mean it's going to happen. But it's an interesting point because who did we speak with? Mentioned the same thing. I think we spoke with two people. Exactly the same thing, that Microsofts are looking at
OpenAI.
Yeah, into construction space more and more now with the AI era.
Well, I think investable, we have to qualify. Are we talking in the next 12 months? Are we talking 5 years? Are we talking own it like Berkshire Hathaway? Right? So
long term, I think.
Yeah, long term. Obviously, I have worked for Autodesk, and I will qualify anything I say is not investment advice.
Yeah, maybe we should say that before.
NFA.
Anything I say. So I am a huge fan of Autodesk. They changed my life significantly. I mean, like any person, I have disagreements how they operate, what they've invested in. Overall, I really like where they're positioned in the market right now today. They finally have a competitive product to Procore to go after construction. And we are seeing companies leaving Procore and Autodesk winning deals outright against Procore. There is some issues about is Autodesk undercutting just and winning on price, but they are winning in the construction landscape right now. So that is a very good trend. the bathtub they have is not going to be affected. Patrick, tell me you disagree. I don't think the next 24 months that bathtub's at risk.
I would agree.
They also, people don't understand how many free users they have of their software globally that they actually are trying to monetize. It's, when I left, this is 2021, but it's in the tens of millions. I'm sure that they slowly over time need to monetize, and that's the AutoCADs and Revits that they've given away free licenses or there's pirate licenses out there. Huge opportunity there. So they have a software to go after construction, which is a very big untapped market for them. So I can see that being a growth vector. That cash cow is not going away. They just did a big rip. I think it was 10 to 13% of their workforce. So you're going to see those gross margins actually improve. They have some activist investors. I think one is getting appointed to the board, which will make them have tighter financial controls. They historically are really good at buying great companies. Almost every single company in their portfolio is through acquisition. I don't think that they are the greatest at building long-term product strategies and actually beating the market that way. But they have a lot of good things going for them. So I like them. I will be, I have been, and I will be an owner of the stuff. I'm not just saying. I really do like it. That being said, long term, I don't think that they have the capacity to execute on the new software in the industry. They will have to do it through acquisition. They are not good at, like, they're really good at incrementally improving a product. Talk to any Autodesk customer, product development is insanely slow. So they're going to have to do it through acquisition. They have the balance sheet to do it. That's all well and good. However, and I'm hoping this means they're getting to what they're good at, because there was this perception we should build stuff in-house. And building in Autodesk is not. There's a lot of bureaucracy. There's people there that have a lot of weight that I don't think understand construction.
Very good.
This activist investor guys, Starboard. So they launched this attack. When was it? 24?
Yeah.
For the first time publicly, maybe.
What was
Let's
that
say a
about?
year
If you can
ago?
just explain. And
Around about a year ago. Yeah, I think we actually spoke about it, Patrick, with you. Yeah, probably a year or so ago.
It was interesting. So back then, like many activist investors, they published a PDF to the general public about, hey, this is our analysis of the situation. Here are the whatever, I think it was like 8 or 10 points of critique that they had. I just Googled, so they took the PDF offline, so I can't find it anymore, interestingly. But I seem to remember, I don't know if you guys have a similar memory or my memory is bad. I seem to remember that they were criticizing the margins, the profitability in relation to the peers. Is that right?
That's why the big rip happened on workflow.
Okay. So they said it was, just to understand then, so it was not a gross margin critique, because Autodesk has like, what, 90+% gross margin. So probably that was not the target of the criticism. It was more of a contribution margin, EBITDA margin kind of thing. Hey, you have too much overhead, sales and marketing is inefficient. Is that what it was?
Yeah, Autodesk doesn't have a 90% gross margin. It's more like,
It does not?
no.
It says here from this video, I got 5.6 billion on 6.1% revenue, gross profit.
Gross profit
Be-
it's more than that. I think they had 500 million in gross profit last quarter.
That would be 92% if that's the case.
$78.
I actually got 90.6% for January 31, 2025. 91%.
Wow.
I mean,
So-
very good on the gross margin level. But then, yeah, the overhead, I think, was the target of the criticism. But I mean, where was it fat?
It has to be across R&D. It has to.
And that's where they recently made most cuts, as far as I understand, was it?
cuts across the board.
So, not financial advice, but will you guys be buying Autodesk stock tomorrow?
I will not, but that's because my taste is very quirky. I have a principle adopted a few years ago that I do not invest in publicly listed companies where the CEO is not the principal owner of the business. I don't invest in employed CEOs.
I'm mostly holding actual bonds right now because I really think the slowdown. There's better time to buy it.
Hey, are you going to Omaha for Woodstock for Capitalists? I mean, he's in bonds, no?
Hey,
Wait,
it's on 300 billion.
I own Berkshire right now.
Are you?
No.
Damn. Any more on this, or should we go to our last subject? Most
Curious.
saucy one.
Yeah, I don't think it. If I asked the question actually, or did not.
And the reciprocal question is also interesting. I don't like Procore loan right now. I think that they're in a lot of trouble. So a lot of Procore's extension is on net dollar retention, and historically been able to negotiate very large expansion pricing. And now there is a viable option for these other businesses in the market. And so that's going to compress their ability to stay. You're doing the same volume because they price based upon revenue. You're doing the same volume. We charge you this basis point. This year we're going to charge you this. I don't think that they're going to win the conversation, which
I would love that.
will be problematic because there is truly a viable product in the market for the consumer. And, so the growth vector for them is going to have to be, hey, can we start selling internationalization? I think that their product that was this payment apps. I don't know if we'll saw that there's some litigation going on with that.
Oh, is
Trade
it?
secret.
Oh yeah,
that was
Oracle sued Procore.
yeah.
Oh, yeah, that's right.
That's right. So I also heard that might not be doing so well. They need another growth. They made some acquisitions that have gone so well. So I think that one is more rocky, and I read that TUI's looking for a replacement. I think that they need a very product centric person to come in and build a strategy of how they're going to withstand Autodesk coming into their space, because they need to creep into pre-con and some of these other things. I haven't liked the moves they're making. And I'm not involved in it. I just see as everyone else does.
That's insightful.
So, as one of the Europeans here, but only one, I can hardly see the growth vector being Europe for Procore. I mean, it's been tried before. Dustin, I don't know how much this raises to your attention, but actually in the UK, for some reason, Procore thinks it's a good idea to advertise on the London Tube. Have you guys seen that?
Yeah, I sent you
how is that good marketing?
Send you a photo a few weeks ago. It's on
You
the building
did
as
that.
well.
I
It's on the building.
the Autodesk does some weird stuff with its marketing as well. I don't understand these companies that are like, oh, I just got in a whole. They hire a CMO that's they're what they know is brand marketing. Well,
Yeah.
they build brands for consumer.
Yes, we met a few of those.
Yeah.
Actually,
You know what I found fascinating talking of marketing at events is when we were in the Procore Groundbreak event, Autodesk were driving a truck around the outside of the building with the advertisement of Autodesk University.
that was smart. That was smart.
Well, Autodesk,
I mean, that's where the target group is. But
Yeah,
on the
yeah,
London
yeah.
Tube,
On
Yeah, the
tube,
London
no.
Tube.
Yeah.
Autodesk is interesting because they buy really good brands, but their actual mission is to only be Autodesk products. So they like PlanGrid as a brand has gone away, right? So that's their strategy, which is like, wait, why would you do that? Where
Well, just
well,
not
I
to-
look at Salesforce for inspiration. They're not getting rid of Slack. They're not getting rid of Tableau. These brands remain under the Salesforce umbrella.
think that's a move that they don't want these other smaller companies, startups, to then grow and perhaps take significant market share in what they do.
Well, they own brand, they own the company. So
No, but before they acquire them, like they don't want, by acquisition, they don't want startups to grow and capture more significant market share.
yeah, that's where you bought it. You have a great brand. I'm telling you, some of the startups that they bought, the brand's better than Autodesk. So it's interesting. It's like when Alaska Airline bought Virgin America.
Yeah.
It's like, wait, or first a better brand than Alaska at the time.
Yeah. Maybe the incentive is just not to just to shut them up and not allow them to grow. And by doing so, they are not allowing themselves to grow, perhaps. Yeah.
Guys, what do you think on Google as a potential disruptor to Autodesk? I mean, I haven't heard like it in that specific term before. However, like Martin said earlier, we have heard from, based on numerous discussions that we've had on Bricks and Bytes over the past month, of these large players within the tech world, and at least observing and looking into the AEC space. So perhaps there is some evidence. Like I said, no smoke without fire.
My guess is Google wants to be an infrastructure player, and that can solve specific problems. They want to be the infrastructure that allows others to solve a specific problem. Why try to develop the models that are going to help you engineer curtain wall versus?
You're right. That would be
Yeah.
a complete change of strategy. Had you asked Microsoft, if I can twist the question a little bit? I guess just a matter of priorities is where it starts for me. So Microsoft has so much to do on enabling, empowering, and sort of capitalizing on its vast installed base with the AI functionalities that is, presenting itself around Microsoft, plus the data center problem. I mean, you guys have seen this. Microsoft is actually now canceling data center projects. So talk about a priority, right? So that's a huge priority. Why would you want to go after the quirkiest and hardest vertical as a growth priority? I just would struggle to imagine you're like a 5%, you're the Norwegian sovereign state fund. You own 5% in Microsoft, largest shareholder. I want to hear that analyst call with the CEO to justify why you're now going after verticalization next to all the other priorities that you have.
AI, man.
That's where it starts for me, not understanding that.
Not a big
maybe
opportunity. We're talking about Microsoft, right? What did they release? Like 60 billion in revenue? Like,
yeah, exactly. I was
Crazy.
going to touch on it. That the quarterly earnings is Google just had like 34 net revenue, 34 billion net revenue in the last quarter. Autodesk market cap is like 58. So they could probably just swallow these companies by throwing lots of money into R&D and trying to build it, having their own infrastructure and how they deal with tech. So maybe what might happen if these large behemoths grow their revenues, there might be a point that they will then start getting into verticals, because the largest companies in those verticals are like 1/5 of their quarterly earnings. But that's just, I guess.
Look, in M&A, you always ask yourself, am I the best owner? So going back to an earlier thing about the bathtubs, right? I would not be shocked, guys. I would really not be shocked if we see over the next, I can't predict timing, let's say a few years, we see a player that tries to resemble the product ecosystem, not necessarily the community that Autodesk has. That is another defensible mode. The product ecosystem that Autodesk has through M&A. I would not be shocked, because that's sort of an interesting way to shortcut and accelerate to building something similar. rather than building everything organically. But then the best owner wouldn't be a Google, or the best owner wouldn't be a Microsoft, just not moving the needle. The best owner would be a software consolidator, so consolidation. Sorry, is that Constellation software? That would not be a good owner because they like standalone kind of profitable companies. But Thoma Bravo, what about that?
I do agree that someone's going to try it, because there is also, the market has become ripe for it, in that there's a lot of companies that in and of themselves are never going to reach publicly traded. They're also not that desirable to be acquired because they already overlap significantly with product surface areas of large organizations. So they're point solutions without a home to go into, but they're probably the right combination of permutation where you could consolidate these to have a really great solution for the customers that's viable against any of the larger competitors.
Maybe that's a business that Brett Jacobs should build. I know he's really tied to logistics.
Yes. One of my favorite people ever. Brett Jacobs. Guys,
Have you ever asked him on?
Never. I've not had the bollocks, to be honest with you, but someone we should try. Shout out to people listening if you can facilitate some introduction for us. Okay. Shall we move on to the last subject? Maybe we should try and have some fun with this, because if you guys have been paying attention to the WhatsApp group, then you will have seen that there's been some interesting discussion around the top construction tech failures. So I think we can play a little game, and I will mark the scorecards for you. So let's go from let's just do the top 3 failures within construction tech according to our community chat. And I will give you all points, and I guess the highest number of points wins. So
Where's the link again?
you can't look. Sheep.
Okay. Oh, okay.
You're
You read it
participating in this.
I think you
Okay,
read it already.
Well, I'm not participating. And if you
Sorry,
remember, then you'll know.
So what's the game rules? Is this like Family Feud? I have to hit the buzzer and guess what other people said?
No. I will ask you, then I'll ask Martin, then I'll ask Dustin, and then I'll give you a point if you get it right for number 1. So, Patrick, you go first. What's the number 1?
Okay. That's too easy if you give me number 1. I would say Katera, people would say.
Martin?
Well, I can't remember him, so I can only repeat what he said. He probably knows that.
Such
Too
a
easy,
bad
number
answer.
1.
I mean, it's the obvious answer is Terra, but do you consider WeWork part of the space?
We work more like property technology. You know?
Okay, you can have half a point.
I don't know
Dustin,
what
'cause it's actually
question. Wasn't a real estate company.
Yeah, well, because it's undefined, you can have 0.5 for that answer. How about number 2? Patrick, Man, you go first, because Patrick, you may already know.
Viv.
You were definitely looking at the list.
No, I have not. That's my fingers.
Okay, Dustin.
I am going category of prefab manufactured stuff. For the next like 3 numbers, I'm going prefab manufactured stuff.
Okay, you can have another half point for that answer. Patrick, how about you?
Yeah, I'm gonna buy prefab for 500. What is Nexi? Is that on the list? That was a unicorn. One of
No.
the 17.
Did it get saved or something? Maybe it didn't.
No, they went into they went into liquidation, and then out of liquidation, out of administration, the assets were bought, including the brand, but it's not truly a revival.
Damn. Okay, so no, and last one, number 3.
What was number 2 actually?
Well, Martin was actually right.
Viv?
Yeah. Oh. So, and actually, let me tell you, you
I
all
was
have
guessing.
You all have 1 point so far. So this is the decider.
I have to
So-
say, I have nothing more to say on the third.
But this one is tough. This is very tough. Number
So
three.
what space is it? Sorry.
So you're in the right ballpark. Is to do with modular homes. Perhaps I could tell you that the country is not typical, and in fact, I think by giving you the country, it won't give too much away. So it was UK.
Oh,
Holmes.
Something,
Hat.
something
Dustin.
L something.
Top hat.
Sorry, Dustin. You said what?
I'm not going to get that. It's something Holmes. It's
Yeah. Oh, Patrick said first. Where are you saying the second one?
Okay.
I think it starts with an I.
I tell you what.
Okay.
Let me give Dustin another half point. So Dustin had managed to answer all three questions with half a point. So Dustin, you get the answer was Ilk Holmes. So Patrick, you hit the nail on the head. So Dustin, you get 1.5. Martin, you get 1. Patrick, you get 2. Congratulations.
Yeah, good.
how
I'm
much
proud of my one.
10 have something to do with prefab?
Should we go through the top 20 quickly? You'll be here straight away. So number 1, Katera. Number 2, V. Number 3, Ilk Homes. Number 4, LNG Modular Homes. Number 5, House by Urban Splash. Number 6, Modulus. We done a very good piece on that. Top Hat. Number 7. Number 8, Connect Homes. Number 9, Ready Robotics. Number 10, Rethink Robotics.
I heard robotics. I heard
Yeah.
7 modular or something Holmes.
Yeah.
One?
So this is
Correct.
by market cap, right? Before they went bust, the top, the largest market cap before they went bust. Yeah.
Capital raise.
Oh, capital raised, which would be
Yes.
equivalent to the market cap or not really? VC.
I don't think so.
VC.
Would
tell
it?
me.
It's sort of the floor if you are a good running business. If you burn money, it's not even the floor.
Okay. So,
So
so we will see. Will we see the continuation of this trend, or people are smarter?
just a fun anecdote. On Katera, so I'm not releasing the name or whatever, but on Katera, one of the people that would consider themselves a founder actually told me once. By the way, great person, love the relationship, but heavily disagreed on the reasons of Katera's, let's say, lack of success, eventual success. That person actually said, Patrick, the only reason why we weren't successful is because we didn't raise enough.
Oh my god!
I'm not kidding you.
And with
That's
that,
a damn
goodbye.
thing to say.
I used to get in the biggest arguments with people about Katera.
Well, actually, he was right.
Yeah.
If he
Yeah, he's
raised
not wrong.
100 billion,
Not
if he raised
wrong.
100 billion, he couldn't miss it.
I think that Katera is like the problem with, like, we'll talk about it later, some founders is they come into construction and they have such a degree of arrogance, they discount everything that existed before. Except Katera did that with like unlimited resources, and so it was a spectacular failure. To listen to that, the CEO, which I've never met, talk about how messed up this industry is, shows such a lack of respect that you were doomed to fail because you didn't ever think about, well, why is it systematically like this? And what Katera did, which was, I remember getting in fights with people when we got acquired by Autodesk. They're like, oh, they're going to solve it. I'm like, they're going to fail spectacularly. Told investors before they wrote hundreds of millions, they're going to fail. And I said it then. I have people that will testify. It was like fail across every step of the way. Terrible. All they were doing was consolidating risks. It was like, let's buy up all the risks.
Yeah.
Now that anything goes wrong across any part of the project supply chain, we're through. It was like, what? And then they just didn't understand it. And then they brought in people that like are industry professionals. They started buying companies. They never had a plan.
And we have, believe it or not, guys, we have 2 companies over here in Europe that have like still the same playbook. One of them from Austria, one of them from Switzerland. The one from Austria, I have to look up the exact numbers, but they did raise several hundred millions, building factories. Plus the original pitch was even more radical. The pitch was we also then keep the buildings that we build on the balance sheet and we operate.
Easy.
So
But
they've
that's-
since abandoned that. Yeah, exactly, Dustin. That was the right look, right? And so they've since abandoned that part, but they still have raised all
Because
this
they
money
couldn't
for
build
building.
anything.
Yeah, no, they have built stuff, but it's difficult, right? Because also the kind of asset class that company is going after over here in Europe, you can't build home parks, right? So we don't build like Lennar builds. There's just not the space for it. You can't acquire an acreage, several acreages of land and put 200 homes, sort of with a similar methodology. We don't have that space.
It's
So
a
over here,
low-rise
if you're in
timber.
that business, you're in the multifamily business. And then then you put an elevator shaft in the middle of a building. You know what I mean? Like that's a level of complexity that as a first type of building is really, really hard to do. So difficult for that one. The other one from Switzerland also built its own factory. And then how do you utilize that? That's a problem for that company, right? And so it's our asset class sometimes is really slow in learning.
That's your VC buddies.
Actually, these two, they have a mix of VCs and family offices, sadly.
Yeah.
Yeah, but
Damn.
I mean,
there is.
it's just crazy to be like, oh, I'm going to be the best at every single aspect of this chain. Do them all at high efficiency well, because I just consolidate all the risks. So I have to be top tier in all of them.
Mhm.
And that's the only way it's successful. Because if you have one link in that chain that you're not top tier, that can all spiral.
So that's it, but also trying to tackle every type of project or every type of design within certain segment of housing. If I'm sure if you can focus on 3-4 types of buildings, you can standardize it and just print them. Obviously, quote unquote.
You sound
print.
very influenced and
Yes, I am.
converted after your Goldbeck visit this
Oh,
week.
Goldbed and QB actually.
We under. Yeah.
Verticalization leads to the opportunity to standardize, and standardization leads to the opportunity to have procurement synergies,
Yeah.
to train people better, to organize the supply chain better, gain control.
Muscle memory of things. Yeah.
Yeah, but that's like how 1% of the market operates. The other 99% don't do it that way. And
What's also hard, like, Goldbeck's been around a very long time. It's hard to
Exactly.
artificially get to that level of sophistication.
No.
You can't negate the fact that it takes time to build to that holy grail. That's like if a startup said, I don't know, I want to build the next universal search engine. So
yeah,
you just like you want to replace Google? Like you that can't be what you say.
Yeah. But to your point, Dustin, 0 to 750 million revenue took Goldbeck 1969, 40 years, right? And then from
47.
47 years. Then from 750 mil to roughly 7 billion took another 18 years or so.
it's a power of
There you go.
compounding.
Yeah.
With that, guys, shall we wrap up?
Yeah.
Well, thank you all so much. And we will see you all next week.
Best episode ever. Thanks, guys.
Thank you.
Bricks, Box, and Bytes.